looking at a mortgage renewal in 2026 or looking at buying your first home in 2026, undecided whether you should go for a fixed rate mortgage or a variable rate mortgage, what is the best course of action for you? Well, if you watch this video till the end, you will have a lot more information on what's happening in the near future, which will help you plan whether a fixed rate mortgage or a variable rate mortgage is the best one for you. Hi, my name is Roshan Victor. I'm a local realtor here in the Fraser Valley, and I help families just like yourself make the right decision when it comes to real estate or decisions around real estate. So stick with me till the end of this video. And if you haven't done so already, please click the subscribe button and the bell icon so that you can be updated on every single video that I put out in the near future. Before we discuss which kind of mortgage, whether it's variable or fixed, is the best one for you, let's understand the overall mortgage landscape. Whether you're on a variable mortgage or a fixed mortgage, it's all determined by the term of the mortgage. This is very important to understand that in Canada, you get a 3-year, 5-year, 7-year term. So every 3, 5, or 7, whatever you choose, your interest rate is going to change. Now, the second aspect to it is the amortization. Amortization period is the period in which you got to repay your loan. You get it for 20, 25, 30 years, and in some cases, 35 years. Basically, what it means is you have 30 years to pay back your mortgage. On a 5-year term, that means every 5 years, the interest rate is going to be revised based on where the market is at that point. Now, why is it important and why are we talking about mortgage rates now? Because in 2026, we are going to have the highest renewal rate in Canadian history. 40% of mortgages are going to come up for renewal. And most of these mortgages were locked in 2021. And when we talk about a fixed rate, in 2021, you could get a mortgage 5-year fixed for approximately 1.8% to 2.5%. Whereas, as of today, if you're looking at renewing your mortgage or getting a new fixed term mortgage, you're looking at for a 3-year term, approximately 3.8%, and a 5-year term, around 4%. And it's important to understand what the impact of this is on your financials. So, what it basically meant is, let's say in 2021, you borrowed $100,000. At 1.8%, your monthly payment would be $410. So, so if you had $1 million mortgage, you would be paying $4,100 approximately. However, at 3.5% interest rate, at 25-year amortization, for every 100,000 that you borrow, you would be paying $500. That is approximately a 20% increase in payments. Now, the same thing at a 20-year amortization. So let's hypothesize that you bought it in 2021, you've paid up 5 years, and you want to maintain the same repayment period of 20 years, and you still owed XYZ. For every $100,000, you would be paying $580. That's approximately $170 extra per $100,000 of borrowing that you have to maintain the same repayment period. Now let's talk about the same 100,000 of borrowing over a 30-year period at 3.5%. You'd be paying $450 per month. That means that's a 10% increase. So most of the people who have renewals coming up would be considering increasing the amortization period up to 30 years if possible, so that they only have a 10% increase in their monthly payments. That also means that you're going to be set back another 10 years of repayment for the property that you bought in 2021. Why is this all important? If you're looking at getting into the market and looking at buying a home or renewing your mortgage, the two options that you have is variable and fixed. Variable right now is prime minus 0.8. You'll be getting an interest rate of 3.5% up to 3.7%. If you're looking at a fixed rate, you would be at 3.8 to 4%, 3-year to 5-year dependent. Now that the Bank of Canada has actually stopped their rate cuts, it shows that they have confidence in the economy. The job markets are doing well, and they're going to maintain this overnight lending rate throughout 2026. Couple that with the bond market doing better, the fixed rates are going to go higher. The numbers that I shared with you is based on a 3.5% interest rate. So if you are looking at a mortgage, these are the three questions you need to answer before you decide whether you're going for a fixed rate mortgage or a variable rate mortgage. The first question is, if you're in a renewal phase, how much additional payment can you and your family afford without compromising on your lifestyle? The second, how much of risk tolerance can you and your family take on? What it means, variable rates are pegged to the overnight lending rate of Bank of Canada. That means for some reason in 2027, if the Bank of Canada raises its overnight lending rate from 2.25% to 2.5%, that 0.25 additional percentage points is what gets added on to your interest rate of repayment. So your payments, depending on which lender it is, either your payments are going to go higher, or the portion of principal that you pay out of your mortgage becomes smaller. So that is something which you need to consider. And the third thing you need to answer is, are you proactive or reactive? While we get into proactive and reactive, let me share with you my personal situation. I am currently on a 5-year term for a variable rate, which is prime minus zero point 0.7 through Scotiabank. Now, the advantage for it is I am in the industry and I keep a tab on what's going on in the market almost on a daily basis. And I have the privilege of actually locking in a fixed rate with no penalties. That's something which we have negotiated in advance. The second factor is, how much is my risk tolerance? So, whatever the current interest rate is going on, I have another 30 to 50 basis points more of interest rate that I am okay paying up to. At which point, I would probably lock in my rate. Now, in order to do that or to know when to do that, I am keeping a tap on the market on a daily basis. So for me, I'm okay taking the risk and being on a variable. And if the market and the bond market keeps going up, I can lock myself in if the variable rates are going higher. Whereas in your case, if this is not your primary business or you are not in the know how of what's happening in and around the market, you're better off going for a fixed rate, which at this point is 3.8 or 4%. And for me, it is 3.7. So the delta over it is only 30 basis points, which, depending on how much you're borrowing, may not be a big amount to take a risk with. For those people who are risk aversive, a fixed rate is always better. So that way you can lock in your rate. You would know what your payments are on a monthly basis, and whether the market goes up or down, it doesn't affect you for the period of your lock in or the term of your mortgage, which is whether it is 3 years or 5 years. But if you are someone who is okay riding the waves, like a lot of people who were on variable throughout from 2021 till date, they have ridden the waves. They have paid in a lot more interest and lot more principal as the interest and the overnight lending rate kept going up. They have the risk tolerance. For them, variable is always the best option. Historically, since 1970, since data has been collected on variable rates, variable on the long term is always the best option. If you're a first time home buyer and looking at securing a mortgage, recommendation is always going to be based on your situation, whether you're risk tolerant or risk aversive. Fixed is a better choice to start off with as you settle into your first home, which you know your payments on a monthly basis, you can plan for your future. And specifically looking at 2026 and the forecast for 2020, the outlook for 2026, a fixed rate mortgage for a first time home buyer is most ideal. So that's my take on who should go for fixed and who should go for variable mortgages. If you're looking at real estate in the lower mainland and want a consult on what's the best option for you, there's a link in the description below which books you directly into my calendar. Let's have a chat and see what's the best course of action for you and your family. And if you haven't done so as yet, please hit the subscribe button and the bell icon, and you can be updated on all the new videos that I put out on a weekly basis. That's it from me for now. Thank you so much for watching, and see you in the next one.